The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. Dow's up 78 to 18,668. New all-time high. That confirms that. You remember I had that webinar talking about new all-time highs to come? And we did it in a week. Wait a minute. It was Wednesday a week ago, and today's Thursday. In just over a week. Unbelievable. Anyway, that's with the Dow. It's really interesting. The S&P hasn't yet made it. The other indices are behind. I'm going to show you something so fascinating. You've got the S&P plunged from hitting not an all-time high, but a huge move up from the low that was made overnight the night before last. Just this unbelievable move, up and down. It was down and up, I should say. And the Dow is down 7 at 2155. Comp index is down 70 at 5180. And I was looking at this and I thought, okay, there's a problem here because we've got a very diverse market. I hope I can go through all these different aspects. But most importantly, what I was looking at is I looked at Amazon, I looked at Facebook, and I'm saying, wait a minute, something's wrong with this picture. Remember I spoke about this maybe I started talking about it about a year ago, and I said, I'm fascinated by the makeup of the Dow. In all the decades that I've been studying the Dow, I think this is the first time since maybe part of the 1980s where it was really close to the XMI, another major market index, another index that is not, it's not fashionable at all now to talk about it. Years ago, it was really fantastic. You could trade options, and it was just a fabulous medium, and was so beautifully balanced because it had Dow-type stocks with dividends and cyclicals. You had stocks that were in sectors that were extremely diverse, as well as you had your GM, of course, in those days, and you had Alcoa, you had of course, always DuPont. So fascinating. Now, what's interesting about the Dow now, I think the mix is fabulous. And look at this. The Dow is up 75 because of the way that it's made up right now. I think I'd spoken about this some time ago. I think that's the leading indicator. Finally, we've gotten back to the leading indicator. In 2000, the NASDAQ took over as a leading indicator, took all the money that normally for 80 or 90 years had gone to the Dow, more, in fact, since 1890s, had gone to the Dow type index. It went to the NASDAQ. Then in 2008, although the Dow made all-time highs, it was really housing that took money away. And then I said, we've got to be careful here. I've got this as a final coda phase. What is going to usurp money, or will the Dow be the leader this time, the final spike to all-time highs? Well, we just had the spike to all-time highs. Let me go through this very slowly. The VIX index is at 1588. It's up $1.51. It's still in the 15s, which is not too bad. We should, in fact, be selling off, but we're not. Why? Because of this crazy strength that we see in the actually, there's a little bit too much in the way of financials. I said probably an American Express or something like that should come out. However, okay, let's go through this very clearly. You've got the S&P did not make an all-time high today. It's under the high of 2190. Yeah, 2193.81. Why did I never put that in? 2193.81, and that I believe was August. Okay, so the high today is 21. What did we go to? We went to 21. I'll just grab this quickly. 2182.30. Okay, so we're underneath that high now. We've pulled back a ton. That's okay. It's a hint that we should in the monthly chart go to a leg C. But wait a minute. Have a look at the. So I've got the 120-minute chart. Let me just move it away for now because I want to look at the bigger picture. INDU. Look at the Dow. Leg D. My strictest interpretation is a leg D. So we're now two peaks, we should say, away from, in the S&P, away from the all-time high. Let's go to the QQQ series. QQQ, that's at peak B if there's no new high this month. So it's leg B at this particular point at 119.66. Look at the failure pattern right here. But the weekly chart is saying sideways at this particular point unless we go into the 112s. You go break into the 112s, that really impacts the monthly negatively. So far, so good. Look at the IWM. IWM is the, not IM, interesting chart. IM is Ingram Micro. Very interesting. Oh, talk about the semis. Wow. So IWM is at 123.64. It failed to break a new all-time high. It's pulled back quite a bit. But what's really fascinating about this is that the stochastic in the weekly chart has just turned up. The monthly is at 87% stochastic. MACD is still flattening out, but good. So far, the IWM is holding quite well. Let's go to the New York Stock Exchange, NYA.X. Have a look at this. The New York Stock Exchange is in leg A. This is what we call a gray A because it didn't go to a new all-time high. I just want to mention for 1 second that I had a flash yesterday. My Chapman wave trend gauge suggested that there should be a down, no matter how sharp the futures are, there should be a down going to a minus this morning. Well, the futures, I don't know what the reason was. The futures were hugely up and they opened up. And then all of a sudden you get the S&P going from sharply higher to minus 12. The Dow did not go. It's only up 56 at this particular point. But I wonder if this is going to fail. But it's the most amazing index, this Chapman wave trend gauge. In the den, P says, Basil, your trend is beautiful. I came about that years and years and years ago. A very special thing that we use. Subscribers know all about it. But what's really fascinating, it has to be negated. In other words, let me show you this. Every day I do this for my subscribers. I have my quintile here. I like to call it my 5 Dow quadrants. It's the Dow 120-minute chart up here, 120-minute VIX down here. This is Richard Arm's trend index. I call it the Chapman wave trend gauge because I only use it for 2 specific reasons: overbought or oversold, and it gives me special readings. And this is the bar chart of the Dow daily and the S&P daily in leg B. So this particular chart, I put an X. I cross it out when it's failed. And out of all of these, it's only failed there 2 times in a row, and we'll see if it's going to fail today. Even though the Dow was up 160 something points and now it's only up 60, it was up 50 just a moment ago, it'll be a failure. It has to go to negative with this particular Chapman wave trend gauge. But it is a failure. It's amazing how many times it's worked correctly, but it's also amazing on those out of maybe 5 sessions over the last maybe 5 years where the Dow has been up huge triple digits. It's given back. At one point, it gave up 180 points and came down to a plus 20 and then closed up about 45 points. That was an X. I had to cross it out as a miss. But boy, was that a fantastic indicator. All right, so we'll be back very soon. There's a break coming up. I want to go through a bunch of things. I had a number of questions. Basil Chapman, Target Technicians Hour. Dow's up 82. General Electric's very strong, and so is UTX. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So, okay, I had a couple of questions. Just let me finish my thought here. Get rid of this here. Look at this. Okay. So there are a couple of things that we're looking at. And so the New York Stock Exchange has made just a bounce in the monthly chart. It stopped at a peak C. This is very unusual. So I'm still waiting for the D. Sorry, that was the weekly chart. I didn't mean that. The weekly chart has done that. What we've got is a peak D alternate count in the monthly chart, which gave that really sharp sell from the 11,000, I think it was 100s, down to the 89.37 low of early this year. And now we're at peak B, and we need to go higher for peak for leg C. So this is just a very strong bounce, and I'm always very impressed with gaps off major lows, gaps of potential major lows. And what I had said as we were about to go to the break is that there are some strong, for instance, you remember I spoke about GE yesterday. Look how spectacular GE is up from 28.19 to 30.45. I say spectacular because it had really been, we had really been battered in that big move from the 33 round number high in July straight down to the 28.19 level. That's a big move for 7 points for a stock like this. A key stock, but that monthly chart has gone back over the 9-period moving average. I like it a lot. Couple of things. So that's GE, and I said, if you go IBM, it's up 4 at 159. This is really good for the weekly chart. I have to tell you, the Dow stocks are looking so much better. Look at the Triple M. Triple M is up $1.78, leg B. Not as good as the others. UTX, which is up 2 at 106.84, made a low of 97. This is 9 points in a major stock. This is, look at that weekly chart. That is really good action. So I'm kind of excited about this. I realized that it was an extremely sharp move. If you go from, look at the futures, the YM futures at YM. If you go to the Dow futures, it was down at 17,418 at 5 o'clock on the 9th in the morning. Is that correct? Well, yeah, okay. 17,418. That was the low that it, oh, sorry, this is a daily chart. So it had made that low, and that was, I think, just at about midnight that night. And then it screamed up to, let me just put this in if you don't mind. I want to change this here. I want to put it higher so you can see it. Right there. So this is a brand new A. This is, in fact, leg A. This is a blue A because it's gone to an all-time high. So it goes from 17,418, did I say? Yep, 18. To where? To 18,714. That's 1,300 points. And basically, look, in 2 candles in the YM, in the futures. That is unheard of. That is ridiculous. That is an amazing move. So this, and what I want you to point out, is that we've gone to leg D. Now, how on earth is this going to be? Does that mean we're about to make a major top? I don't think we can. I think if we still have to see the S&P go to its leg C and then leg D, that takes us into 2017. A quick question, and I think this is relevant to what we're looking at. What about the emerging iShares emerging market ETF? What about that? Well, I've been hesitant about this for a while. People kept asking me about it, and I said, I'm not sure I'm seeing anything in this particular ETF, and now I am seeing something. There was that oval pattern that we put at a peak D right there in the EEM, trading at 35.37, down 88. And that was the high of the 23rd of September at 38.31. And now it's trading in the 35s. And that should have been a potential for a Chapman wave stalk leg formation. But if you take out, not you, if the price takes out the middle, the low bar of the oval, in this case 35.85, you've negated that pattern, and what it turns into, let me show you what it turns into, only half of the ellipse. It goes like this. That's what it turns into, an arch formation. So I had a question about the patterns, and I'll go to this quickly. If you remember correctly, introducing the Chapman wave methodology by Basil Chapman, chart analysis in the stock market, there are a couple of things that we need to look at. If you look at the arch formation, that's chapter 13 right there, what we're looking at is a whole bunch within the chapter. There are just certain techniques that I use, and I discuss them in great detail, but it's that pattern that says you're arching over and you're taking out the left side low of importance, and that takes you to the H pattern. I call it the dreaded H pattern, because when you take out that left side low, you can go much, much lower. That's in chapter 17. And that applies exactly. This is a pattern that I said is going to be prevalent from the summer. I've been talking about it. Now we're talking about cup formations. We're changing. The tide has changed as far as I'm concerned, because we've gone to new highs. Now look at this. Now you're looking at the H pattern that keeps fading. Wait, why do I say that? Look at that big H pattern right there. Because you've got an H pattern right here. Look at those H's. H, H, H. And now we've got to watch this very closely, because instead of breaking down, you really wanted to see the EEM somewhere at the 38, so 3680 area, somewhere in there, and I'd say, hey, that's holding very nicely. That weekly chart could be very good. So EEM, be careful. If it takes out 35 round number, the 35 low, there's really nothing much until you get to the gap of 34.76 to 34.51. Okay, so be careful. I had a question about the SMHs. We are short the SMHs. It's fascinating that within this context of market screaming to the upside, there are some sectors that are doing very well. Yeah, the SMHs are not doing very well. It's trading at 66.91. We're short from the 69.40 area. And look at that. There's that H pattern that's potentially forming in the semis, and that's the reason why I didn't want to jump in on the long side, having missed a perfect move the other day, yesterday morning. I had to wait, and we're still waiting. We're waiting for a pullback to decide on which sectors to go long and which sectors are failing. Question about chart formations. Could you look again at that EW? Well, it's really for subscribers. All right, okay. EW. This is the Edwards Scientific. You know what? I'll treat this as a study, and also I'm starting to prepare a series of webinars, because I've been asked so many questions on the Chapman wave methodology. So let me deal with that in that way of peak F tops and a bunch of things like that. I think it makes much more sense. That's number one. And number two is, let me also ask if anyone's interested in a webinar on the Chapman Wave techniques. Is there something within it that you would like, that you've been working on, that you'd like to further get more involved in, like an instant restart or whatever it is? And maybe I'll be able to add it to that series of webinars based on these techniques. So, okay, so let's get out of this. I wanted to answer some questions. Someone asked me about crude oil. Look, crude oil, as far as I'm concerned, has that arch formation. And that's a very, look at the monthly chart. That's a very serious pattern. It has to, it's held the support level. And I can just make it real simple. If the crude oil goes to the 42s, it's a real problem. If it punches in the next 2 days into the 46.50s, that's at 44.60 right now. If it pops 2 points in the next few days into early next week, that'll...
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I got just a ton of fabulous questions during the break, and I also go in the den. So let me just go through a couple of things. High-grade copper. To call a move in high-grade copper from the 2.08 area to today's high of 2.59, amazing is actually understating it. It is extraordinary. Let me show you the monthly chart of this of copper. There have been occasions when you've got a monthly move like this. So I'm just going to say that in commodities, there are times when things just are way out of hand. You just, if you're in the thing, it's fantastic. Imagine being short and having limit up like this. Can you believe it? Okay, so there have been moves, but this in recent times, and I'm talking about recent times going all the way to, let's go to this bar right here, January of 2012. Okay, so since 2012, there's not been a month like this. It is extraordinary. And what's happening is that the MACD finally is getting a steady move up, and the stochastic is at 42%. I would consider this to be a really big positive. On the short term, I have to also consider that that's a reigniting of the weekly chart, short-term term, I should say, not short-term. That is more like a C, and I'm going to call it a C rather than a B, because I like to be more conservative in my waveforms, and we've found over the years that it's really much better to be conservative, to get to a C rather than call it a B, because if it goes to a D, that's fantastic. But if you're already, and you go at a B, that means you're going to go B and C. That's great. But if you've miscounted or there's an alternate count and you didn't really see it, you could be waiting for a D when in fact you've already got there. So calling this a C in the weekly, very positive. Stop dead right at the 200 period exponential moving average in the monthly, right there. Look, that's that as it stands right now. It's stuck above it, but so far the price is right on the 200 period moving average. And if you're looking at the daily, I'm calling this E/A. Why E? Because E is an extension of that previous D, and it's such a quick move and such a serious move. I want to be a little conservative and say E, but I'm not prepared to short copper under any conditions. I think copper stocks are acting very well. And the MACD is at a vertical, and the stochastic's at 94%. This says to me it's probably an A, but we will get a rectangle formation, probably get an inside buy mode of sorts. In the meantime, it's acting well. It's a little late to be getting to stocks, copper stocks. You have to really wait a little bit. Okay, that's that. Now, if I look at the KOL, which is coal, this is the ETF for coal. Spectacular move, had a huge spike to the upside, closed at the lower end of the candle's wick, and then it popped up a little today, way below the high of yesterday, which was 1474. The high today was 1394, and it's trading at 1367. I think it's done just for now, coal, and it's G/C in the monthly chart, a weekly chart, and that says, hey, you could pull back. There's a lot of room. 1252 is your key support level. Maybe now we go, this is the rectangle that I put in there. We broke above it. Now I'm going to put the rectangle in here. I'm going to say this is probably going to be a trading range for a little while. Okay? And the monthly chart is in leg B. Very strong. What about PPA? Nobody knows what PPA is because we use it a lot. And it's just one of those ETFs that most people just kind of don't even know is there. I love looking at it. Sometimes we're in, occasionally we're in. Most of the time, we're just looking at it. Is this now a leg D or a brand new B? So I'm going to put D/B in the weekly chart. We know that this president is not shy to say anything about the defense aerospace area. So there's a play here, but I think it's gapped up and it's done for now. This is what I'm thinking. Leg D, probably a peak D in the daily. I think they're going to pull back, but it's only leg C in the monthly chart. What about XLF? Well, the XLF, I don't use it anymore unless I look at it. This is a leg D in the daily, a leg C in the weekly, but really I can't even talk about that because when they remixed it, they started it over again. I really have to look at the BKX index. That's the bank. What happened? Oh, BKX, I don't need the X anymore. BKX, there it is. And that's in a leg, I'm calling it F for now, and a D in the weekly. And that says to me, this is a period right at this particular moment where the market might have got a little ahead of itself in the bank index. It's leg B breakout in the monthly chart that's very positive. But there's a chance that the stochastic's pulling back, although it's at 84%. MACD's good in the weekly chart. Stochastic's really bumpy in the daily. I think we might have extended ourselves a little bit too much in the daily. So that says bank index is something you want to be looking at. If you haven't bought it yet, you want to be buying it on some kind of a pullback, all right? And look at this. TLT is a plunged, and now it's having a little bit of a bounce. It's at 124.55. It's only down 2, but it hit 123.42. Look at this ugly candle in the weekly chart, and that 122.52 200 period moving average in the weekly chart. It's almost there. It almost hit it. And the monthly chart, this is the thing that makes me really nervous. Is this the end of my Japanization of rates? In other words, from now on, we've got is this a tidal change? That's the question tomorrow. I might spend a little time trying to answer it. And let me just do this. I didn't show the 10-minute chart. I don't think I did. For the E-minis, we made a peak E. We tried to rally above it, failed. It made a cup formation and then dropped very sharply from the high today of 2180.50, and the low so far is 2147.75. A break under that will start to impact the Dow. The Dow is up 121. The S&P is down 4. This kind of divergence, I don't actually like it. I just happen to like it because it's the Dow acting very well. Okay, so the TLT is going to be a big question. The VIX index, VIX.X. What am I skipping? I haven't even looked at the dollar yet. The VIX index almost hit that rising trend line. It made a peak F/B. I think there's a peak F. I think that the VIX index is not going to go back to 2301 just yet. And we'll watch to see Friday afternoon at the close what happens. Is this an election spike and pullback at 2301? So I'm just keeping you informed that at 1564, if the VIX goes to 17 anything today, if it touches the 17s, this market, the Dow will give back a huge chunk, and the S&P will go back to about a -10, -12. And if it falls from here at 1562, it actually dips into the 1530s. Somehow the Dow will go back to its high. It's an amazing market right now. I think I've covered a whole chunk of what I wanted to look at. Copper. Did I do? Yes, I did copper. Of course I did copper. I discussed it. So now I can go back to the questions. So here's a really great question. Basil, what do you think? It may be that now there could be a move and create single leg A. Let me look at the Dow chart right here. Look at this. This is what I showed subscribers this morning. There's a single leg A. Oh my. 3, 4. Is this 5? Is this still 3, or is this possibly 5? Yeah, I think it's actually, okay. This is a peak C. So far, it looks like a peak C in the 120-minute Dow chart. It should go to a D, which says it should go to a higher high, and then we've got to be a bit careful. That's the 120-minute chart. But look at the daily. Every day I show my subscribers, I give them a whole analysis of what we're looking at. Takes a lot of time, but I love doing it. Now let me just show you something very interesting here. So this is what I do right here, and I show it, and I explain what we're looking at. And this has the characteristic of a single leg A up, except it has gone to an all-time high. It must be a blue A rather than a gray, because it went above 18,668 this morning. This is from yesterday. So I'll be back. Basil Chapman, Tiger Conditions Hour. I'll continue with those questions. This is a very nice one, and I'll continue with the thought process.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So, folks, we've only got 2 segments left. I'm going to get to this question. It's a really good question. It doesn't have to be answered this very moment because it's stuff that I've kind of spoken about. It's that single leg A up. Here's another single leg A up. This is Merck gone to an all-time high. Big question about it. I'd like to deal with that as well. Plus the other questions. So I'm going to treat this one that I just got as a special case that I'm going to talk about tomorrow in Chapman Wave, in the technical Chapman Wave hour. And I'm also going to just show something here. So I had a question about Merck. Merck all-time highs. It was a shock to me, and I'll tell you why. There was a perfect peak F. There was a perfect peak D in the daily. Chapman Wave, that's what you look for. I had a down arrow. It came down beautifully. Everything was perfect. It went from the 64s down to the 58s. Hey, that's a big move. And then the weekly chart had a peak F. That was a confirmation right there. So for 3 weeks, it's been down very sharply since that down arrow. And it made a leg D. It had already made a leg D in the monthly. It had completed everything that we look at. We're looking at Merck. MRK is the symbol. Hey, wait a minute. Suddenly it spikes to an all-time high. And the question is, very confusing. It is confusing, except for one thing. How I came about this technique some over 20 years ago is it's just trial and error. I call it the School of Hard Knocks, very expensive School of Hard Knocks. I found that there's something that happens after 3 bars that I eventually call the peak D with the Chapman Wave instant restart. And that essentially says, although you have an alternate count, there's a really good chance that if it happens in a certain way within 3 bars, that it is breaking to a high above peak D, that in fact you've got a brand new buy mode that can take you to a D. So look, everything's perfect. There was absolutely nothing incorrect about this down arrow at peak F. But how do you explain this leg C? Well, if you use this Chapman Wave technique, it says, hey, Merck is now back in play. That wasn't such a big move. If you're looking at monthlies, a big move is from 63, 62 that it made back in 2015 January and plummets to 45. I'd say that that's a big move, 17 points. However, what I am looking at here is the technicals are really still very good in the monthly chart, not so much in the weekly. So this aberrational spike based on the news that with Trump, you're probably going to have less pressure on the biotechs, etc. Biotech, IBB is up at 289. Just the other day, it was in 245. This is very interesting. So this is an alternate count, and that's a peak A, E/A, F/B, and now we're in leg C, and Merck should be going higher. So I hope that helps the questioner and makes it. That means it can't be a leg E because from peak D and the start of the buy signal right there on the 15th of the daily chart, 15th of September at 61.12. We pierced that decisively. This has to be a brand new move. Trough A, B, C, D, E. Trough E, and now it's a brand new move. So Merck is in play. And if it's only A, you should technically go to B, C, and D. That's incredible. And that's over a period of time. By the end of the year, we might be making a D in the daily. It should be sooner if it's a daily chart. All right, so I wanted to cover that question about platinum at PL. This is a continuous contract of platinum. I hope the notes, yep. So this is what we've got here. That's a lower low. That's what my eye says. So that's A, B, C. That should be a D. A very quick, in the Chapman Wave, this is what we're going to discuss if I can put this whole webinar series together. A, B, C, and when you get to a D, it says it doesn't mean that you're going to have a major sell signal, but the quicker you go, peak A, peak B, peak C, peak D, the greater the chance that you can have a pretty sharp pullback. And lo and behold, today's a pretty sharp pullback right from the 200-period exponential moving average, the 200-period simple moving average, under the 9-period moving average, and platinum is gone. It's down $25 at 978, and it made a peak D from yesterday's high of 1,023 round number. But the weekly chart says, yeah, it's a nice start, but a lot more work needs to happen. And the monthly chart says, yeah, it's not very, it needs a lot more. It needs to get to the 11, it really needs to get to 1080s, 1100 to become bullish in the weekly chart. Hope that helps you there. Next question is, CRB. Okay, so the CRB index, and this is really interesting. Look, dollar, TRCCI, that's the Thomson Reuters equal weighted commodity index, made a peak D. And inside, remember I said I'm a little nervous about this inside bar peak D after that big peak A minus at 4 in the 429 area. So now you're at 418. It's the H pattern. Remember the dreaded H pattern? It's the H pattern. It looks like it's pulling back. I'd be very careful in the commodities. Now, there's a big difference between that and something like if you have one of the commodity ETNs, because they're holding a little bit better because of the mix, and that makes a big difference. So the mix of this, an equal weighted, says that maybe it's a bit of a problem. And at this particular point, I'm suggesting that there's a little bit more weakness to come. Now we can get to the dollar. Question about the dollar. The dollar is screaming higher from the low that was made overnight on Tuesday night. It went to 95.89 and it's trading at 98.92. Remember what I said before? I don't see that at 3 points in the dollar on the upside to make an all-time high should be a big deal. If it does fail, I'm besides being kind of mystified that the pattern is failing, which this pattern doesn't usually fail. We'll see what happens. We haven't gone above last month's high of 99.12, but if we go above 99.12, that starts leg E in the weekly chart. I'm thinking 100.52 is a good place to start leg D in the dollar, and then I'm going to say, now we've got to be somewhat careful because of what might happen, and I'm studying gold very closely. We haven't gone back into gold. Gold to me says that was a peak F top that was made yesterday. Horrible reversal candle until gold can go into the 1308 area and hold there for 320-minute bars. I don't think there's a chance that it's going to retest that high for a little while. And it looks to me like gold wants to pull back, and that's going to impact the monthly chart. In the meantime, let me just say that I'm thinking gold has made a peak E, a peak F top. I'm putting a down arrow. That's that deadly peak F that we always talk about, the 6 highest peak, and that single leg A up. This is a very good example of what the questioner was asking. The single leg A in the weekly charts is be real careful, because if you take out, if gold takes out 1250 as support, it probably won't just test the 1243 low that was made the week of the 7th of October. It'll probably go underneath it. All right. Whoa, we're doing a lot of things here. Next question was, this is a good question. A VIX buy at 37,000 at 17 strike on 12/21 expires. You expect the VIX to go to 17. I think that the VIX has a chance just to touch the 17s in the pullback that could be going on from the earlier this morning into tomorrow. That's the way I'm looking at it right now. I think we're somewhat overbought in so many sectors. If you look at the 10-minute chart, that platform makes it really interesting. Make it real simple. A close below 21.47 in the E-mini will probably impact not just the S&Ps, but will impact the Dow, and the Dow should pull back about 80 points if that's going to happen. But in the meantime, as I'm looking at it now, the VIX calls in the 17 strike. What is that for? It must be for November, right? That's a week's time. A week from Friday. It must be a week from Friday. Yeah, I think there'll be a chance to hit it once. But then I'd recommend getting out of it. All right, Basil Chapman, Tiger Technicians Hour. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So we're looking at the XOP. That was a question. The XOP is the XLP. So XLP is the, let me just get out of this because it's got a left side, right side price time ash. It came in 1 week early. It's a S&P Select Consumer Staples. So I made a mistake here when I was looking it up. I'm going to put down search XLP. XLP components. I have them all typed up 1,000 times, and I put it somewhere and I can never find these darn things. Now, do they give it to me here? Yes. So look what we've got. So dollar affected PG, Procter & Gamble, plummets, peak, ABCD, recycles, goes right there, and peak D, peak E in the weekly chart right there. Wow, that's fantastic. Peak E and a peak C in the monthly, but under the previous all-time high of peak D. So that's a problem. So let me just do this quickly because we're going to run out of time. So if you look at the dollar-related stocks, obviously with the dollar so strong, they have a problem. And that's why the mix in the Dow is so good now, because they got rid of a lot of these stocks. So Coca-Cola made a peak E in the monthly. This is almost like bonds. Oh man, this is going to be so interesting. Tomorrow I have a show. I'm going to spend more time on the bonds, and I'm going to talk about that single leg A up and the potential for the different things. So, yes, the XLP is under duress. Procter & Gamble, Coca-Cola, Philip Morris, Altria Group, Walmart, PepsiCo, CVS. It just goes on and on. Costco, etc. Colgate. So it's a big deal. And I think that's part of why the S&P is weaker than the Dow, because they obviously have more of those big caps. That's number one. Let's just quickly look at the IBB. Look at the IBB. Big spike up. This is still in a major down move. So this is going to be really interesting. If it breaks above 301.80, that's going to be very important. But if, look, Trump is going to do nothing for 3 months, at least 3 months. There's nothing he can do. He's not president until middle of January, right? So this is all speculation. I'm a little concerned that the speculation got ahead of itself. It's fantastic because it confirms for me my outlook for the monthly charts of the Dow and the S&P. But at the same time, on a shorter term, it's just too much, and I think it needs to pull back. If it doesn't pull back now and we go into acceleration mode, man, that's going to be a whole other thing if there's no digestive phase. So we're about to wrap it up. So let me cut to the chase here. I'm going to make it real simple. Dow, INDU, right here. Single leg A up. I'm expecting that there is some kind of a pullback. And that pullback, even if we go a little higher, if it all occurs within this big move up and it's still a leg A, then you've got to watch 18,000. It's right there. 18,000, between 18,600 and 18,500. That's a 200 to 300 point decline. That's going to be key. If it just fails to hold 18,500, goes right through it, that's going to be an issue. Why? Because this is potentially an F/A in the weekly chart. And F is negative, very negative. A is very positive. I do not like to be between two things. I'm looking at it and I'm saying, I'll deal with that A at the end of the week. That's Friday. I'll have the weekend to study the charts. Is leg D in the monthly chart? D is where you start to get a little cautious. But D, when everything's just beginning to improve, is very good. So I'm going to do this. I'm going to say, hold your horses. If you haven't bought any of the key indices right now, I think you're going to have a very good potential to do that. If on the shorter term basis, I think that there's going to be a pullback here. Based on my chapter wave trend gauge, I would not be surprised if the market actually gives back quite a bit after being a little too excited. Let's see what happens. But overall, I think we are in that coda phase. We're starting the second part of this coda phase. I think it's going to be, the coda phase is going to be split into 3 parts. I think we've finished the one. We've got another part to go, and then there's going to be a crazy part. I don't even want to talk about it, if I'm correct. And that crazy part is where you want to stop being very, very bullish. You want to start becoming bearish. And I don't know how long the time sequence is.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,